Hello ladies and gentlemen, welcome back to the channel. In today's video we are going to be taking a look at the ETF selection that is offered by Schwab. If you guys saw the video I posted yesterday, it was all about the mutual funds that were offered by Schwab and kind of taking a look at the mutual funds that I'm currently invested in through Schwab and giving my opinion on how, I think they do a pretty good job of explaining everything. And if you guys can already tell from the screen we're on currently, obviously they do the same thing with ETFs, and they make it very simple for all investors. But before we get into all that, go ahead and smash the like button if you haven't already, or if at any point in this video you do enjoy something you see or hear. That's the best way to promote my channel and get it out to other investors like us who are trying to learn the basics of investing, become better investors, and things such as that. Also subscribe to the channel. We're continuing our climb to 1,000 subscribers. Hopefully we can get there by the end of the year, but that's all up to you guys. So if you enjoy this video at any moment, go ahead and hit the like button and subscribe to the channel. We're going to get right into it. So as you guys see, ETFs at Schwab. Let's start somewhere more basic. Let's go to ETFs versus mutual funds. What's the difference when you should invest in one versus the other? Benefits and pros and cons of both. So let's, obviously they're going to be similar, but they're different in some key ways. How are ETFs and mutual funds alike? Similar structure. Biggest similarity, both represent managed baskets or pools of individual securities, for example, stocks or bonds. So if there's you can have a ETF that mirrors the S&P 500. You can also have an ETF or a mutual fund that mirrors the S&P 500, and both of those are going to have roughly 508 stocks in them. So they're both very similar in that department. ETFs or exchange traded funds, if you didn't know, that's what an ETF stands for, and mutual funds both offer exposure to a wide variety of asset classes and niche markets. They generally provide more diversification than a single stock or bond, and they can be used to create a diversified portfolio when funds from multiple asset classes are combined. And I think one of the big things that ETF potentially pull away at is the niche markets. As you guys will see when we get into it in a little bit, there are tons of ETFs, not just through Schwab, but through all different, firms and stuff like that are offered. You can get your REITs, you can get your bonds, you can get your large cap, mid cap, small cap, all the things that mutual funds offered as well. But in my personal opinion, I believe there are more ETFs, more selection there, but I'm sure there are some mutual funds like that. How are they managed? Well, they can be actively or passively managed. Most ETFs are passively managed, and then obviously with a mutual fund you can pay a little bit more, have a little bit higher expense on that mutual fund for an actively managed mutual fund. How are they traded? ETFs trade like stocks and are bought and sold on an exchange, experiencing price changes throughout the day. And as I talked about with my mutual fund video yesterday, the mutual fund price changes once a day, obviously not on the weekends. Mutual fund orders are executed once per day, with all investors on the same day receiving the same price. So it's going to go up and down based on the daily difference. But ETFs, if we look up an ETF right now, let's go to VU. As you guys can see, it's going to be going up and down as the time goes on throughout the day. So they're very, very similar to stock. They're very liquid-like stocks, and that's continues into the next section, which is because they trade like stocks, ETFs do not require a minimum initial investment or are purchased as whole shares. So you're buying it, say it's a share of Ford. I believe Ford's right around $7 right now. You're paying that full $7 unless, of course, you get a fractional share. I don't know if you can buy fractional shares of ETFs yet or not, but that's definitely something to look into, because when you go to something like VU, let's just keep this open. Obviously they're at $314 per share of VU, or the Vanguard S&P 500 ETF. But when you go to a mutual fund, especially the ones that we looked at yesterday, you only need $1 to put in there. Now obviously you're not getting a full quote-unquote share of the mutual fund, but you are going to be invested in, and you can invest with a much smaller dollar amount. So what are the costs? ETFs have implicit and explicit costs. While your broker will disclose the cost of trading, which is usually going to be $0, and the ETF provider will disclose the operating expense ratio. Don't overlook the bid and ask price spread and premium discount. Okay, so that gets all pretty deep. These costs are explicit and result for the buying and selling of an ETF in the market at a price which may differ from the value of the ETF's underlying holdings. So that's if you're putting in buy or sell orders and stuff like that, which obviously in a mutual fund you can't do. Mutual funds can be purchased without trading commissions, but in addition to operating expenses, they may carry over fees, for example, sales loads or early redemption fees. Tax efficiency. ETFs often generate fewer capital gains for investors since they may have lower turnover and can use the in-kind creation / redemption process to manage the cost basis of their holdings. So obviously that's a lot of big words thrown in there. For the mutual fund, a sale of securities with a mutual fund may trigger capital gains for shareholders, even for those who may have an unrealized loss on the overall mutual fund investment. So there definitely are differences, and obviously at the end of the day it all depends on your goals and types of investor you are. Consider an ETF if you are if you trade actively, or you're more tax sensitive. If you're looking at the tax sides of these things, that's a rabbit hole that you can dive into. Obviously I don't know everything about it, so I'm not going to dive into it and act like I know about some of those things. Mutual funds are great for investing frequently. You can regulate your deposits on these things, and throw it in a Roth IRA or 401k or whatever it may be, and just have those regulated and continue putting money in for when you retire. Similar ETFs are thinly traded. When you buy or sell ETF shares, the price may be less than the net asset value of the ETF. So obviously that has to do with the bid and ask price spread. Once again, you're looking for a fund that could potentially beat the market. That's usually when you have an actively managed mutual fund. That's when you see some of those things. You're investing in less efficient markets. Some markets are highly efficient, which means they're so popular there isn't much opportunity to add any real value via active management. But in less efficient markets like high yield bonds or emerging markets, there may be greater opportunity through active portfolio management. So that's definitely something to look at. Say you're in that emerging markets or developing markets or whatever you want to call it, and you have an actively managed mutual fund, they could potentially beat the market, and not just beat it, but absolutely could crush it just by learning about that market and making investments that they think is necessary. So enough about the basics. Let's dive into some of the mutual funds that Schwab has to offer. 25 ETFs managed by Charles Schwab Investment Management, $0 online commissions and low costs. Broad exposure, ETFs across a range of assets classes and fund companies. 2,000 plus zero commission ETFs, 110 plus Morningstar categories, and then once again zero commissions, which is something you should expect from your brokerage at this point. So build the core of your portfolio with Schwab ETFs. Among the lowest operating expenses in the industry, which is very true. You do see a lot of low expense ratios on some of these things. Zero commissions. ETFs available across core asset classes provide diversification opportunities through exposure to multiple market segments for the foundation of many investors' portfolios. Leadership from Charles Schwab's Investment Management, one of the industry's largest and most experienced asset managers. So they do have some of those things where they may not necessarily be considered actively managed, but they do have exposure to the Charles Schwab Investment Management. Schwab ETFs offer two different methodologies that can work together. Consider using both approaches when building a portfolio. So you have Schwab Market Cap ETFs, and then you also have Schwab Fundamental ETFs. So the market caps are going to be your large, mid, small, and then obviously international ETFs, very similar to what we saw in the mutual funds. When you scroll down to the Schwab Fundamental Index ETFs, discover an innovative strategy beta solution. So it's going to be based on the beta of these stocks that are in the ETF, which is very interesting. It's a good look to consider and obviously potentially invest in. Portfolio diversification, a complete to traditional or complement to traditional market cap index and actively managed strategies, helping to create the potential for more attractive risk-adjusted portfolios. So these portfolios, that's the big thing right there. They're all going to be based on risk. Looking at beta. If you don't know what beta is, it's how risky a stock or a mutual fund or an ETF is compared to the S&P 500. The S&P 500 is or I guess I shouldn't say the S&P 500, I should say the market as a whole, which would be the risk of the beta of the market as a whole is 1. You look at a company like Tesla, they could potentially be trading at 2.5. Their beta could be 2.5, which means that they are 150 times riskier than the market. Or you look at something like Kroger or Walmart, and they could be trading at 0.3 or 0.6 or something like that, which means they're over half. Or half as risky as the market. So it's definitely something to keep in mind when you're looking at a portfolio where you're just trying to be safe and make these investments and potentially make a return for when you retire. Cost efficiency, generally lower fees and low turnover, okay. Passive, disciplined methodology, a transparent, consistent, rules-based approach. So that's definitely something to get into. Learn more in the interview with the father of fundamental index investing, Rob Arnott. I assume this is a video. We're not going to watch that in this video, but if you guys are interested, I'll leave a link to this website in the description below, because they do a good job of explaining all of these things and really breaking it down for you on a basic thing. So let's take a look at some of their domestic equity ones. So as you guys see, they have all sorts of options, broad market, large cap growth, large cap value, dividend, mid cap, small cap, and even REITs. And then you have the 1,000 index. I believe these will be the 1,000 largest stocks in the U.S. Stock market. But this is going to be very similar to the VU or a S&P 500 ETF. Of that. Large cap growth is something that's very interesting. Large cap value, and they have them all broken down into categories here. They even have mid cap and small cap. So potentially, I don't recommend doing this. And again, all these videos are all my personal opinion. They're not always meant to be taken seriously. They're just my suggestions. You could build a Roth IRA portfolio or a retirement account portfolio out of ETFs. Do I necessarily recommend that? No. I know ETFs are kind of the big thing to do now. And there's going to be a difference. Don't get burnt buying a mutual fund. Obviously, Schwab does a good job of limiting these things, but it has too high of an expense ratio, too high of whatever it may be. I don't know. I'm blanking on the other ratio, but don't get burnt on paying more than what you should be, or one that doesn't have a good track record. Really do your research on mutual funds, and obviously if ETFs call your name, go for it. But I think mutual funds are going to be a better investment when you look at a retirement account. Then you look at some of their international equities. They have a small cap international. It was very interesting to see a little bit higher of a cost here, but obviously compared to the industry, and I guess that's what's up here as well, very, very low on all of these things, which is really nice to see. International equity ETF, this would be similar to the mutual fund I'm currently invested in. And then again, emerging markets is very nice to see from an ETF. That's definitely something that I would consider investing in. And then you have even fixed income, which is going to be mostly bonds and stuff like that. Which, if you're nearing the age of retirement, or however, or say you're 30 or 40 or whatever you may be, obviously you don't want all of your money to be exposed to stocks. So you may want to start adding, 5 or 10 or 15% of your retirement portfolio into bonds. Which obviously these things could help out with. I'm sure there are mutual funds that offer these things as well, but obviously Schwab does a great job of laying these out for you. Then you look at the Schwab Fundamental Index ETFs. Let's start on the domestic page. U.S. broad market index fund. So that's going to be the vast majority of the U.S. Market. Then you have the large cap and then a small cap version of these things. So obviously it's a little bit higher than the industry average, but these are going to be very interesting. I may have to do a video separately on these and really dive into what these truly are, because of the fact that these are brand new to me. I'm not 100% familiar what these are. I'll probably watch that video as soon as I'm done making this video. And then you look at the international. They have several international funds as well. International large company, or large cap, small cap, and then emerging markets as well. So, I mean, that's going to wrap it up for this video, guys. I think Schwab, at the end of the day, it's really not the sexy choice by any means. I think if you want the sexy choice, you're going to go with like a Fidelity or E-Trade or something like that. But Schwab does a really, really good job being user-friendly, being able for everyone to understand, being really good at what they do, having a little bit of everything for everyone, and being good at explaining those things to their investors or potential investors. So I really do appreciate Schwab for having all these things laid out. And obviously there are definitely more selections over here just on ETFs, and we could go into depth for an hour on these things, but I'm going to try and keep this video very short. If you want me to talk about ETFs anymore in a future video, leave in the comment section below. I believe this video was suggested to me by a guy named Addy, or I'm sorry if I'm pronouncing your name wrong, but I really appreciate the comment section, or the comment you left, and giving me the suggestion for this video. If you guys would like to see any future videos in the about certain topics, about whether it's Schwab or whether about the stock market as a whole, let me know in the comment section below. Like, comment, and subscribe if you haven't already. Until next time, happy investing.